What is going on, Z community? It's me, Tamer Azizz, and today we're going to be talking about if you should invest in Canadian or American markets. So hopefully this video will give you some more direction as to which market you should invest in. So today we're going to be looking at what your goal is with investing, what type of platform you're going to be investing with, and some pros and cons of both markets. So let's get started. So before anything, stocks are basically a fraction of a company. By owning stocks, you own a portion of that specific company. For example, let's just say that there is a company out there that has 10 stocks out there. If you end up buying one of those stocks, you own 1/10 of that company. Obviously, it's not as simple as this, but this is as far as we're gonna go in terms of discussing it within this video. So instead of this, let's talk about your specific goal when it comes down to this investing. There are three main types of investing that you need to consider. There are value investors, growth investors, and income investors. Value investors are those who invest in companies because they see the value that the company gives out now and believe that it's only going to increase in the near future. Growth investors, on the other hand, are people who think that a certain stock is going to exponentially increase over time. A perfect example of this is Tesla, where it used to be trailing around $150 to $200, and then out of nowhere it just went to $2,000. And lastly, we have income investors, who are people that will invest in a company to generate themselves a stream of income. This stream of income comes in the forms of dividends, and they are usually companies that have already established themselves and are not really going to experience a lot of growth, or they're not going to experience a lot of downside. A perfect example of this, or at least in my opinion, is Costco or Walmart. These two companies will relatively stay stable the entire time, but will give out a dividend. When it comes down to finding these stocks in both markets, you can find both value and income stocks pretty easily in either one. But when it comes down to growth stocks, I personally believe that there's a lot more opportunity for this in the American stock market rather than the Canadian stock market. Regardless, you need to make a decision as to what type of investor you want to become with stocks before even making your decision as to which market you want to go with. Now, another factor that you must consider is where are you going to be buying and selling these stocks? When it comes down to all of the brokers that we have here in Canada, I honestly don't consider any of them to be an actual option unless you're Questrade, Interactive Brokers, or Wealthsimple Trade. My criteria for using Wealthsimple Trade is if you are a Canadian value or growth investor. I also recommend Wealthsimple Trade if you buy in increments less than $330 and are an American growth or value investor. On the other hand, I recommend using Questrade and Interactive Brokers if you are either a Canadian or American income investor. I also recommend these two brokers if you buy in increments of $330 or more for either Canadian or American market. So let's talk about some pros and cons of both markets. One of the pros of the Canadian stock market is that it has a very strong financial, material, and energy sector, with sectors being parts of our running economy. Some examples of companies that fit within these sectors include banks, natural gas companies, or companies that specialize in producing materials such as cobalt. But because of this pro, it actually leads us to one of the cons of the Canadian stock market, and that is it's only dictated by these three sectors. Because of this, comparing the annual returns of the average Canadian stock market and the American stock market, you notice that the average return for the Canadian market is far much lower than the US one. As you can see with this pie chart over here, it shows you all of the sectors of the Canadian stock market. There's an index that represents all of these sectors, and it is called the S&P TSX Composite Index. If you've ever heard of the S&P 500, this is basically the Canadian version of it. As you can see, financial, materials, and energy make up a huge portion of the Canadian stock market. This means that if something big happened to one of these, either if it's going down or if it's going up, you're going to be hit pretty hard. The reason behind this is that the Canadian stock market does not have as many companies as the US stock market. This means that there is less diversification when investing in an overall market. Because of this negative factor, I would personally recommend investing in only individual stocks rather than investing in a whole market in the Canadian stock market. We did make a lot of references to the American stock market, so let's look at its pros and cons. The biggest pro about the American stock market is that it is home to the largest stock market exchange in the world. Because of this, there is far more diversification and big companies come out of the US. If something bad really happens to a specific industry or a specific sector of the market, this will actually be offset by other industries and other sectors. This is what they mean by diversification. The more diversification you have, the less risk you're going to be making. Here we have another pie chart, but this time it's the American stock market. If something happened to the healthcare sector of the American stock market, chances are you wouldn't notice too much of a big hit because another sectors such as the industrials or even the energy sector would offset this hit. But if this happened in the financial sector of the Canadian market, on the other hand, you would notice big hit to your portfolio size. And because of this diversification and the amount of stocks within the American stock market, it is a lot better for one to be investing in an overall market instead of an individual stock. There's also one con about the American stock market, and this is just tax implications when investing from over here in Canada. If you are holding these American stocks within a registered account, such as an RRSP or a TFSA, you might be subjected to something that is called a withholding tax. I don't want to get too much into it because it might confuse you guys a little bit, but if you want to know, I've put a link in the description below that talks about this a little bit more. This withholding tax can be applied to you if you either sell an American stock for profit or if you are getting American dividends from a specific company. Some brokers will actually include this whenever you get your dividend or you get your profits, but some of them don't. You're gonna have to follow up with your broker to see exactly what the situation is looking like for you. But looking at the grand scheme of things, both countries have amazing companies that you can invest in. But at the end of the day, it depends on your preference, your style of investing, your goals, and even the broker that you invest with. Some people even like to invest in both markets, so maybe that's an option that you could look into. But honestly, I want to hear what you guys think. Would you guys rather invest in the American market or the Canadian stock market? I would love to hear your feedback in the comment section down below. But that's pretty much it for the video, Z community. Make sure that you give this video a like, hit that subscribe button and notifications bell. This is me, Azizz, signing out. Peace.